Hey, Gabo.
Oh, hello, guys.
Hello there, hello there. How are you?
All good, all good.
Good, good. Is it? It's morning for you, isn't it?
Yeah, so right here is 10 a.m. What time zone are you guys?
I'm UK, so it's 6 p.m. for me.
Oh,
East,
so it's
Eastern.
a late afternoon Sunday chill conversation.
Exactly. Yes.
Mm.
Okay. Well, I guess we'll kick off. So we are joined today by Gabriel Jimenez, better known as Gabo, who is CEO of the newly announced Best Friend Finance. I'm with Braden, and we're very excited to hear all about the plans for Best Friend Finance. We're going to run for about an hour, and if there are anybody here at the end, we'll take questions. So welcome, Gabo. Thank you very much for your time, and good to see you again. Let's just go straight in. So tell us about Best Friend Finance, how it came about, what it's for, and what are your plans for it?
All right. So, Best Friend Finance is purely focused on providing essential financial services for people in an equal way all around the world. We are focusing on what we consider the 6 essential financial services on earning money, moving money, insurance, borrowing, lending, saving. And what the way that we are we care on that context on the function that is not about that we are promoting a particular kind of technology, but we are enabling the equal accessibility to those financial services. And in order to do that, there are many things in play that needs to come together. And in one core area is all related to compliance, is all related to the different kind of regulations on different countries. And in the other layer is the technological aspects and the crypto aspects to it. Because crypto on this whole mission that we have plays a big role, but it's a role of enabling that to actually to exist, and enabling not isolated from the laws and the regulations and compliance rules that exist, but actually encompassed to make it more efficient. Because ultimately, what end users cares on a day-to-day living it's not about the kind of technology that they're using, but that what they're using is easier to use, faster to use, less costly to use, basically more efficient to use, and that they can have a top service on what they're using. So what we were doing before with RPay, as many may recollect from their memories, ARPA was the initial pilot project that we launched at Reserve. Back when the project was still on the conceptual phase of the protocol. And this is prior to the development of the protocol itself, where was RSB, and there was a basket on within RSB that enabled RSB to actually exist. But what RP was about, it was about more regular day-to-day people actually use stablecoins for their daily life. Because there has been so many talks about these topics, many crypto projects claims about these topics, but especially back in 2019, when talking about regular people, I'm not talking on people that is doing Web3 projects or NFTs or DeFi. I'm talking people that has absolutely nothing to do. Not the millions of people, but the billions of people potentially that has nothing to do. Will they actually use crypto on a day-to-day with the benefits, with the potential theoretical benefits that it brings. That was kind of like the core question and the core thesis, core hypothesis as well on the crypto industry. And we were focused on validating that thesis. And validating it, it was coming from the direct idea on how stablecoins will actually benefit people in countries with capital controls and hyperinflation, as Venezuela did. That was something that I was working before and that I was trying to change precisely back in my home country in Venezuela. And actually, when I met Nevin back in 2019, that he's telling me about Reserve, and we met in a conference, and he's telling me that they're about to launch a pilot app to prove the use case of stablecoins. That precisely what my point to Nevin at that point was, is in Venezuela. And not only is in Venezuela, but in Venezuela, people need this, but it's not because people is looking for the technology, but it's because people is looking for a solution. People were using, toilet paper as a currency back at the time, and I'm not putting an exaggeration here. It got to the point where, people were using things that they could get around to trade with other things. So people were looking for solutions into that. And then we started developing further that pilot. I joined Nevin and the Reserve team in not proving the point of the technology, but focusing on how can we make it more efficient to Venezuela to protect from inflation. How can we make it more efficient to Venezuelans to go in and out of their local currency? How can we allow Venezuelans to send more efficiently money abroad and receive more efficiently money from abroad? We developed RPay in that way. And as many of you may recollect, what the app was about, it wasn't about being a crypto app. It was basically for the user a dollar balance that you could put money in and money out from your local currency via the decentralized liquidity model that we especially built, considering all the limitations that Venezuela had. And that, and even though disclosed and the customer understood that their balances were back by an stablecoin balance, what the user was treating it like, and what the user care about it like, was as their local solution, as their dollar solution, as a dollar equivalent solution, without thinking on the equivalence, but as basically as it is, for that precise reason, for those efficiencies that it has, that it created. So we fulfill that abstraction that many times people talk as well on the crypto spheres, that crypto is only going to get massive when it's going to be abstracted, like when we use cards and other digital systems. We're thinking on the technology. Very much crypto can fulfill that. We precisely did that because we were looking. I was particularly not motivated on just to promote a technology itself, but to actually make more efficient solutions for the people that actually needed it. The technology was an enabler into it, and with it, of course, that the technology is promoted, but it's not because of the technology being the end goal on that. So what happened over the years is that over the years, that initial small pilot started growing, got to 600,000 plus users and such, as you guys all know, or 5.5 plus billion dollars in transaction volume. And at the same time, the what initially was RSB, that initial concept, a stablecoin to prove a point, through the conceptual and development phase, the protocol team developed the whole reserve protocol. That is this platform to create the different R tokens with the self-healing mechanisms and such. That we have seen how important it is on the stablecoin market to have those capabilities as well. So the protocol was ultimately implemented, which at the same time, as we know, it is meant to be, it is a decentralized platform, and the reserve project overall, it is meant to be a decentralized project. It's in the process of becoming more and more decentralized. So what was happening, while not only the project grew, but we also faced some important roadblocks along the lines, roadblocks that you find when you scale to the sizes that we were scaling regarding Venezuela in one area, regarding to the sanctions, because there were some changes on that front, regarding to the capability of expanding globally, as it is the intention. It was the intention with Harpay and with intention of the team to understand that the unequal accessibility of equal financial functions is a global issue, not a Venezuelan only issue. But what we were doing was mostly focused or Venezuela dependent. And what I meant Venezuelan dependent is that as we expanded in other markets, we realized that the people using it in other markets weren't for the local purposes of these local markets, but it was mostly because of the Venezuela correlation by receiving or sending money to and from Venezuela. So it was too Venezuela dependent on from in a model that then to scale globally was very hard to do and very costly at the same time to do. Kind of like the reason, one of the core reasons behind that is the liquidity model that we were using. That it was a semi-decentralized liquidity model, and I mean semi-decentralized because we still approve the independent liquidity providers to have their own AML programs and all of these different compliance components, but they were the ones doing the transactions with the customers, making the whole transaction flows more expensive. So as you that are in London, imagine that every time that you're going to change from pound to dollar, you need to have, instead of a direct a system of through your bank or through a card processing that you're doing, every time you need to get to a currency dealer, that currency dealer is always going to charge something, making it less efficient to use it on a day-to-day basis, which is basically what was happening in all the other countries where there weren't those capital controls. But in Venezuela was the place that liquidity model was being efficient and competitive. So through that process, and at the same time, we realized that we needed it to switch to be more commercially competitive, because again, it's not about having on and off ramps in hundreds of countries. It's about having this cost be efficient and services be more efficient than or better than the ones that they have. If not, people is just not going to use it. Why are you going to pay more to use something that you would otherwise use in another way, in an easier and cheaper way? So when we realized that, and we started working through that last year, at the same time, many changes on the crypto industry happened as well. It started with the collapse of the Lunaterra, following up with the FTX collapse, and further down the line with the collapse of SBB and Signature Silvergate banks, the whole crypto environment, and I won't say it only in the US, but actually in many places around the world, was being seen in a very negative way. In a negative way, to be able to interconnect to the banking system in a way that will be cost efficient. What I mean by cost efficient, yes, you could potentially pay an intermediary but that intermediary is going to categorize you as a high risk business because of this whole context that is happening in the crypto industry itself, and will make you pay 2 or 3% more than one traditional fintechs or traditional financial players will pay just to do the same kind of transaction. Which, if you start by having that difference in pricing, and when I'm talking difference in pricing, it's not a difference in pricing between the traditional finance and crypto players on 2%, the difference. No, when the actual cost between one and the other is almost 2 or 3 times how different it is, and this is at a scale, not even when you're starting over. So you cannot effectively compete with the traditional finance or fintech players when all of your costs are going to the roof because of how expensive they're becoming, hence effectively not making more efficient to people to send money, to make cross-border money transactions. And even though theoretically speaking the cryptocurrency can reach a global capacity, the actual cost when it comes to the end user, it will actually be more costly for the user. And even if many times you don't see that, because what many companies do is that they take this cost and subsidize it, or bring revenue from another source to cover this cost that is being paid somewhere. So through the whole process that we started last year, when we started adapting into how do we scale globally, how do we bring those financial services that we believe that if the world will have equal access to those financial services, it will be a better place, where the bridge to inequality will reduce, less poverty will come. How do we create a path and a strategy that can actually fulfill to that? And as the collapse was happening on the whole crypto negative sentiment that I was describing to, we also learned one important piece. Whenever that we were introduced, or we started talking with a financial partner through this whole process, whenever we identified as, hey, we're reserved, and imagine a banker, and then you needed to explain, well, we are a decentralized stablecoin project that people can create our tokens, but we have created RSB, and RSB is still functional. And then you have RSR that people can stake on the different R tokens. Many people, anyone can implement an R token and can mint it and such. And we have been using EUSD. That EUSD is a basket of different DeFi components on all of these places, but it's on the platform that we created. And at the same time, we have created this app. That this app is actually a centralized app because it requires a whole compliance and KYC components in order for the transactions, to be able to interact then with a banking system, as we were looking to do, and or the semi-decentralized liquidity model when it was local independent liquidity providers that we were doing like and telling them that we were looking to provide these services in a global way, and at the same time to create this decentralized stablecoin project that ultimately will lead to a coin, to a token that can actually hedge inflation. So all of that combined to any bank, and even when you add and to that equation, you throw also Venezuela in the mix, with the whole target sanction issues that it has, and being a crypto project, like the banking partners and the financial partners were basically not understanding. It was just too much. It was just like, why will I partner with you guys if this is extremely complex and risky, and everybody is just actually backing out from crypto on the financial players? So we'd rather not work with you, or you should talk with another intermediary, and that they will charge you very punitive prices, that, like I mentioned, won't make it competitive. So it was, we learned that we needed to make a more clear distinction, and that now that the reserve project was already on implementation on the protocol, and was becoming more and more decentralized, and is the path that they're going to be. The way that everything was being thrown in together as we started was being more difficult to digest to the external partners, also internally, as there are like different missions that are intertwined, but at the same time are looking for different things to each other. It was clear to us that we needed to take that further step and create a whole entity that will actually aim on the mission of what the RP team was trying to develop, without involving the whole mix of the stablecoin creation platform into it, making it way simpler to our financial partners to understand, making it way simpler to our own team to identify on what we need to be looking at to create those efficiencies on the case of BFF, and also to our audiences. And I'm not talking about the audiences that follow the RSR community and such, but the audiences that are directly looking to use us directly. They understand more clearly what we can offer and why we do. That layer of clarity brings more focused products, then brings more focused partners, and bring a more focused team to pursue that end goal. That is what we have. That is when then we decided to take the steps, and we decided this, quite a few months ago, that we started all of this process, and we started to modify the way that we were talking then with the new partners. As we were engaging to it, we saw how it actually changed the whole conversation, the whole understanding of things, and also allowed the team to be way more clear on the opposite about what were the things that we needed to do. So Veteran Finance is a response, basically, to the new context that we have been living on the crypto policy, but at the same time is the next step, the next chapter on the decentralization of the reserve project overall, but at the same time is using the whole R token capabilities in order to what it has done since the very beginning to offer more efficient services to the users. And through that, we have conquered very important steps over the last few months. We are not right now on feasibility challenges. We have overcome those feasibility challenges to basically bring more efficiently services to our users and to do this new US strategy that I have explained through the different channels already on how we're focusing on how we're looking to expand at first. So that is what Best from Finance is gonna be doing. And one last missing piece on this, by the way, Best from Finance is not the consumer brand, but Best from Finance is the company that is going to create different products. And we also have learned that different products targeted for different segments as well. It's important to have them some differentiation between them so you can further optimize on those different segments, and especially on the very early on. But then you have the Best from Finance that you can understand Best from Finance as how Meta correlates to Instagram, and or WhatsApp or Facebook and others. That is the correlation of what Best from Finance is going to be with the different products. We're just focusing on one right now. That is the core app that is the one at the same time that for the international users is having the digital dollar custody, offering the dollar balances to the customers that are backed precisely by AUSD. So it's an abstraction component that that is what make it functional and what could bring it to that option that the whole crypto industry have talked about as well.
Okay, brilliant. Thanks for the very detailed explanation there. I think we're pretty excited to see what products are going to come out of Best Friend Finance. Yeah, that'd be cool. I think Braden's next question actually leads quite nicely from that, in that we know you're going to have a US bank account and you're going to be using the US as the central hub.
Yep. That was a very impressively long answer. You kept it very coherent, so it's very, very impressive. So can you describe how like the cross-border transactions would work, going from the US dollar bank account to EUSD when they are being sent internationally, US to Mexico, for example?
Yes, great question. So let me start first quickly on why US customers will have USD balance. The answer to that is that if you ask any everyday American or people living in the US already on their minds how they would rather hold their savings or their money for their everyday use, if they would rather choose a stable coin or having them on their bank account, the most likely answer that they will answer, if they are not having any additional benefit like an important yield on the stablecoin could do, that they would choose a bank account at first. So that is number one. Second, to that is that when you're using a bank account, you get instant interconnectivity to all the US banking capabilities, systems, and technologies that are integrated into the banking network, and you get the similar cost, the same cost basically as every other player in the US is doing. So you get from the start a matching. You're starting on a matching competition point in the US. On top of that, what we have added is like, okay, so we're starting on this matching in the competition, but let's us focus on a target segment that is heavily underserved in the US. That is the US Latino market. Why that US Latino market? Well, only 65% of US Latinos are bancarized, are fully bancarized. The big margin that compared to between 88 to 92% of white Americans, for example. The big difference between those is that the US Latinos claims that it's because of language barriers in one end, or because they may not have the right documentation through it. Actually, when you go to a bank account to open a bank account as a Latino in the US, you often feel that you are like in a trial because of how many questions they ask you and such, and you, if they open you the account because you were able to have all of the documentation, you feel almost like grateful to the banker that makes you even the favor. That is usually the experience many times that Latino faces over here. And we focus on the US Latino population at first. One end, all of our experience in Latin America that we have, we know how to talk to the Latin American consumer. A big percentage, a majority percentage of the RPA team is from Latin America, so it's our natural market that we understand very well. I'm an immigrant myself on the US. I've been under the asylum process for almost 4 years now, so I'm directly have experienced these barriers and these challenges myself as well. And the idea is that if we're able to achieve the success that we're looking to achieve within the US Latino population, to be able to interconnect them with the whole continent, not only in the US, but with the whole continent effectively, then we're going to be able to expand to other regions of the world similarly, from the US being the central hub. Why? Because the US is a huge melting pot of immigrants from people from all around the world, and it's a global financial hub that sends and receives money from basically almost every country around the world. So it was like, let's just start first on the excitement that we clearly understand it. Let's develop to make the cross-border transactions more efficient to them. But let's also look to talk not only to the U.S. Latino population that is not bancarized, that is a very important segment, but also to those that are bancarized, but that their banking services are not completely suited for them. And when I'm talking not completely suited for them is, for example, 27, a foreign household in the US is 27 times more likely to send a remittance than a US native or a native person, person from the US will be to send that cross-border transaction. So, and which also translate to when people is sending a cross-border transaction, 82% of the people usually look at their bank account first to send a cross-border transaction, and they ultimately decide not to. One, because it's extremely difficult when you're sending from a bank to another bank. It's extremely difficult to do. So many steps are in the process. Costs are very high. So people end up deciding to send it by other digital apps or physical remittance companies, because of the level of frictions that there are, and they still need to pay very punitive costs at that point of time. So what we were able to develop is the ability to, from your bank account, to be able to send that cross-border transaction or in a more efficient way, more efficient on the cost end for us, that then will make it costless precisely to the user in the US to send that cross-border transaction to the user in Latin America. That then the user in Latin America will be able to spend it via the international card program that we are also implementing, and sending it to their local bank. That is going to be the case only for Mexico to start with, and then we're going to assess on which other countries we are going to prioritize to do this, as there is a heavy lifting work that is needed to do to make this cost efficient for that particular country. But the primary method is going to be the card. So that is the reasoning of why banking in the US, as we're looking to have the most people as possible in the US to be able to cross-pollinate and create those network initiators in different countries as well around the world. And people were going to promote that people use the card. So that means that leave their balances on the app so they get a repetitive as well behavior, and they get the whole benefits as well of being in our ecosystem. How did we achieve this? So the way that we did it, it was creating a particular entities for different purposes under our umbrella. So we have an entity dedicated for the US, that is the one that is serving the US customers and the US persons, and is working directly under the sponsorship of the bank that is our partner to enable this. And then we have an entity that is on a US entity, but is serving the international customers only. So the entity that is serving the US persons is not having any crypto exposure. They are not doing any crypto transactions in that particular entity over there. But the entity that is serving the international customers does have a crypto profile because it's custodying the stablecoin on behalf of its customers. So that is what is doing that centralized, that international entity is having the custody on behalf of the international customers that may be all around the continent. There are a few exceptions where we're not going to be offering first or service, like Brazil, Nicaragua, Bolivia, and of course Cuba, that we're not looking to offer on our near midterm any kind of services there because of it. But that's the broad concept behind it. Now, how does it work? Well, so instead of doing a cross-border transaction from one bank to another bank in Latin America, what is actually happening is that from the USD account of the user in the US is sending USD to a third party in this moment. Down the line, we're gonna do it ourselves. We're starting with a third party because that way allow us to get to the market first faster. Is converting those USD into a stablecoin, and then is giving those stablecoin balances into our company that is serving the international customers. Then that is all happening within the US. Then at that point, the international, the US entity that is serving the international customer, basically on the internal ledger, puts that balance belongs to a specific customer internationally, regardless of where they are located. So there is not a cross-border stablecoin transaction that is happening, neither a cross-border banking transaction that is happening. But what is basically happening is a domestic transaction on this point that is happening. So we are saving on the cost and making it more efficient. There is another component in here that also make it more efficient. That is that whenever that you have a bank account, you need to pay a cost to it. What many banks do is that they waive this cost once that you have above a particular threshold of balance. So, and the reason that they waive that is because they are making money out of your money. And that is the reason that they waive that cost, because you can imagine there is no free lunch, there is cost associated to keeping your account, to dealing with your account. So they need to make money in order to sustain their businesses. The same will happen with international customers if they will have a US dollar account. And not only that they will have also there will be cost involved into it, but those costs will be even more expensive because those are higher risk because are international customers and not US customers. So there will be way more risk involved, making more expensive to hold accounts for those international customers on that front. So by us doing the custody of those dollars, by us doing the custody of the stablecoin instead of for the international customers, instead of having it on a bank account, we're also saving on the cost that is actually having an account for that particular customer in place. And as you all guys know, there are also another layers of advantages on how we can produce further revenue. For example, if we decide, for example, to stake more SAR into the USD balance and things that without even compromising the custody of the users' balances, and by having 100% of that in our reserve, we can even have revenue sources further from that, making it even more efficient than what the traditional ways will work. All of that efficiencies, what translate to is that the customer won't need to pay for that cross-border transaction to happen. So very much like when you do a domestic transaction on Cash App, it will be the same internationally. There will be absolutely no cost for the customer. And in fact, we created an incentive model that if you send a cross-border transaction and the receiver is spending that balance through the card, the sender of that transaction is actually getting incentivized with points that then they can turn into balance for their accounts, and or different mechanisms into that. But we're promoting precisely that that behavior to exist. But that is based on all the efficiencies that we created for that to exist, while aiming to the segment of the population that we are more specialized to talk to, and that we have partnered with a bank that has a mission of financial inclusion as well, and that we are looking also to target not only the bancarized Latinos, but also looking to bankarize the segment that has been most underserved on banking in the US, that is the Latino population in the US on that front. So that is how it basically works, and the reasons that it works that way behind the strategy.
That's very interesting. I am eager to see you guys launch. And to see the
100%.
messaging, of course, too.
So yeah, this, I mean, Ultimately, because it's labeled, it's kind of a labeling rather than the physical transaction of foreign banking, isn't it? So you're kind of what it sounds like is this internal transaction of US dollars into EUSD stablecoin, but that's where it stops. And so the Mexican peso part doesn't really happen. So it's super efficient. And if they want to spend Mexican pesos, then that happens through the card. And that's that's almost like a traditional credit card system anyway.
Exactly.
So,
Exactly. So,
right.
like I mentioned, it's optimized for efficiencies. It's not optimized to make it a blockchain transaction because, like, the customer don't care. The customer care about it's cheaper for me. I'm getting more incentive from this. It's easier for me. That is what they care. That is what the day-to-day billions of people are actually caring when they're using something.
Cool. And so, all right, now that probably advertises itself, but obviously people still need to know about it. So, what plans do you have to get users using the new app, and what would you quantify as success in, I don't know, let's say 12 months?
All right. So once that we launch, that we're looking to launch late this quarter this year. And like I mentioned, I'm also really excited to talk about this because what I'm talking are not plans or visions that are on ideation phase. We are currently in execution phase. We are already on the development phase, and that's the reason we worked a lot behind the curtains and very hard, and it was very difficult because we had to modify quite a lot and create a plan that actually will make sense economically, sustainably, and for the end customers, and that can reach in the billion. So we are already on the execution part, and like you said, we consider that it's a strong product. It is a strong product in the way that we consider what we have on the initial offering. And however, that is not enough. A great product without a great distribution is not enough to reach the massive success that is needed, especially when you're talking about we're looking to win into the US market. And we're not looking to win only on the US Latino population. That is our first step. We're not stopping there. That is our first step, but we need to focus and prioritize how do we win first here. We need to win first here in order to keep expanding through a strategy that allow us to be fully global, as we're looking to through our mission to do. So there is a couple of components to take into consideration. One, you cannot do what other big players or important players in the US are already doing. Because if you play into the same playbook that they are, you're likely going to lose because they have more money on the context of they are already well-established players. It's a very developed market. It's not like in the example of Venezuela, that is a very underdeveloped market. The US is an extremely competitive market here. So you need to have a new playbook of distribution. That is something that we have worked as well for almost a year precisely to have a very different playbook on how we're going to approach it. That is one end. And that is directly correlated to our brand play or brand approach. So just a heads up on that. And I'm not going to explain at this moment of time because we are still on certain compliance related matters with our financial partners through our brand approach. But what you're going to expect from that is that we're taking a very controversially bold approach to what our brand play in the US is going to be. If you are into movies, references that I like to mention is like Cruella de Vil on the last movie, like a Cruella kind of like playbook, or more into the marketing business world, more like the liquid death of fintech. So we are looking to have a controversially bold approach that is aimed for awareness within the US. That is what we're looking to do. And the approach that we are doing, we will announce it, of course, prior to the launch, so the community can understand more about this strategy that we're aiming and optimizing for awareness, to make other people talk about us. That is a superpower as well that we have, as you guys have seen from the past. But with this approach in the US, that is what we're looking to do. Number two is incentive systems, like our reward program that we are creating. It's a different playbook as well. Like, for example, we are going to be the first program that people is going to be able to earn more money than they spend sending a cross-border transaction. So they are going to actually earn money instead of spend money to send a cross-border transaction. How did we achieve that? Through our efficiencies that we develop, through the different revenue streams that we develop, through the encouragement of the card that we develop that creates another revenue source for us. So we're looking to be that to create a very innovative and viral reward system that is going to help through the process. Although having that incentive system and having the brand play that we're going to have, we're also mindful that we need that this is something that happens, especially, and we're very responsible, and we have done it already as a team in the past, on when we need to tune up and tune down basically our marketing strategies. And the reason behind this is that as soon as we release our product, to reach an instant what is called product market fit, it's an extremely rare fit. And what I mean by that is that once that we launch, we likely are gonna wait for data. I mean, we're gonna launch with marketing and different components, and we're actually going to aim at first to California into our marketing tactics, though mostly detail, but we're looking to validate with data the retention and the growth components and the usage of the app, and we're gonna be making tweaks into our app and into our offering based on the data and the conversations that we're getting from our journeys, even though what we're learning comes precisely from that experience and from months and months of research, and ourselves being part of that customer segment as well. So it's not going to be what I'm saying. There is not going to be an hyper growth on launch. We are going to measure, we're going to listen, we're going to tweak, as we did with RP. If many of you remember with RP, we were almost like during the first year and a half, we were like around 8 months of those with an actual waitlist with only 500 users. 500 we had, because we wanted it to make the app for them the best financial app that they have ever used it in Venezuela for getting dollars. What we did created such a strong not only product, but such a strong sentiment within these customers and within the people around it, that then once that we released it, and once that we liberated that wait list that we have, and that one that people was able to get it, because we were having the data, and it wasn't just because of the sensation. We were having the data, and that this was okay. We tweaked what we needed to tweak, and this is something that is being very meaningful. Then the hyper growth stage reached on that. So we're looking to, after launch, to have several months of analysis, sensing, tweaking, or offering to make it right to the point where our customers are the best advocates, the best word of mouth into it, before furthering adding more woods to the fire. So there is gonna be some initial users, but there is not gonna be an explosion at the start. There is gonna be an explosion that we are preparing on the following months, that we were going to be looking to do as we tweak our app into it. Again, the scenarios could be completely different depending on how the data that we're receiving and how the usage of this. But with all of that considered, even though with all of these considerations, we're gonna be launching with very it's like a snowball effect, where we're gonna be launching on the new app and the new product that we're putting on. A snowball that is just going to get bigger, but that is precisely mindful of starting small, and that is going to grow, and the way that it's going to grow is way bigger. And that's the reason that we're doing all of this, and the sacrifices that we did and the hardship that we went through is way bigger than anything that we ever reached before. But needs to start over and have the space to this. And I just rather speak clearly to the people following the project as well. It's not an instant success as soon as we put our product out. That will be responsible. The team is actually, I ongoing talk with the team. We are in a basically pre-product market fit approach. We're in a battle where we need to prove ourselves, prove that our product is working. We know where we're building is very strong, but we need to see and tweak and adapt, and that is something we're really good at.
That sounds pretty exciting, and I can understand the throttling initially, just to make sure that everything works right. And once you get a few thousand people using it, then that'll stress test things, and people will like certain parts and not other parts. Yeah, totally get it. That sounds really good. Okay, and I think we're onto Braden next, aren't we?
Yes. Mela, do you need to leave, or?
I've got a bit of a hard exit. I'll listen for a few minutes, but I think I'm going to have to dip out. So when you see me go, then thanks very much for your time, Gabo, and I'll hopefully we'll speak to you soon.
No worries. Thank you so much. I also have about 10 more minutes as well. So thank you so much for everything.
Okay. See you later, Mel. Hey, so you mentioned insurance, lending, borrowing, and investing, raising money as additional pillars for what Best Friend Finance would like to provide. How will these come about? Are they traditional banking offerings, or are they something that would be provided by DeFi?
Well, precisely what DeFi and new art tokens and could be created, and they, like I have mentioned, we are not looking only to one kind of solution. Well, we're looking to what is out there in the world, how all of this assemble can actually be assembled together to offer something that is more efficient, more inclusive, and more equal to people in different regions of the world. So it's not exclusive to one particular area. I will say that that is our mission, However, it is not something that we are focusing at the start with. So we're focusing on our core area that we're focusing right now is in cross-border money movement. That is where the biggest efficiencies and innovations and that we have created will enable to. So cross-border money movement, number one, number two, saving, and as we succeed on these areas, then we can expand further along into those other financial functions. But it's a matter of right now having the right and needed focus, because if not, you dilute too much into what you want to do, and you're not able to be greatly effective in each one of them. So it's the obsession right now on the effectiveness, especially on the cross-border money movement, where we have been focusing the way, and the reason that we disclose this now is because it's our mission to do all of those down the line. We're going to build all our products and using the different components that we are building or integrated within the apps that we are already going to be launching. We are looking to integrate all of these pieces. Our tokens are a core enabler and many efficiencies and many things that it could create. But I don't have right now an answer on how it's going to be, because we are not investing the time right now to find the solutions right now to bring in those functions right now to our customer. We're focusing on the first step right now of the staircase.
Okay. Yeah, I mean that makes sense. That's good. Focusing on the small market and growing outward. With all that being said, I'm gonna kind of do like a faster lightning round here to get through these questions and still get some answers. Basically, so I guess what is the biggest obstacle to growth for Best Friend Finance?
The biggest one?
Obstacle.
I think that the biggest obstacle is actually to don't be labeled as another crypto company. And the reason that I mentioned this to you guys, even though we are all related to crypto and the reserve ecosystem, and this is an enabler of this, we are not the same to an exchange. An exchange is a place where people go to speculate and get yield. What we are trying to do is bring more efficient financial services to the people, and the reason that we use crypto as a component to it is because it enables those efficiencies. It's precisely what the early crypto players were actually talking about, on the potential of this technology, but the way that it is perceived and understood on the financial world and around the world, whenever you mention crypto, is when does it goes up, or what are the tokens that you're holding, or it's always related to the speculation. And that way, the what it brings is that under the curtains, on the commercials that then you're signing, on the partnerships that you're enabling, and everything, all of those costs comes and then increase your cost. And by increasing your cost, then you're not able to offer those financial services more efficiently in that form. So you're losing that ability and that purpose on a very important technology. So the whole placement of it is an area where, if you actually look, for example, or the Best Friend Finance website, we're making it very clear to the world and to our partners. We're focused on providing the essential financial services in a universal form. Because it is unequal, that unequal is widening the gap of inequality, and it will be a much better world and more empowered society if everybody will have the same level of opportunity on the financial services. So by changing the perspective of it, it enables you to partner much better, to do commercial much better, to execute much better, to have a team more focuses on what is the thing that we're building, and on what we need to be obsessed on the efficiencies for the customer too. And we look then at the crypto component as a tool, not as the end goal of it. So that was a big blocker, not blocker, but obstacle that we're making it very clear, and you guys can see it on when you guys read the website or such of Best Friend Finance, you will not find many crypto mentions to it, because it's not the goal, and we're trying to make people understand it's about the efficiencies. Crypto is just being a tool over here. That is how you get to the billions of customers. And just for you guys to quickly think about this really quickly, no one knows how PayPal works, or no one's like, when I'm talking no one, it's the general population. The general population doesn't understand how the banks works, how the cards are working. They're caring about the financial services out there, and what we're trying to do is do the disruptions to get to reach to that massive adoption. That is a big part. The other component, the other obstacle to that is that even though there is that perspective, you still need to work on assembling those different tools that theoretically has that capability when combined together, but you need to work very hard with potential partners or regulators and with your compliance and everything to make all work and make sense. Because when you incorporate a complete new tool into the whole stack in a different way that it hasn't been used before, there is a lot of groundwork that you need to do first. And that is part of the work that we have been doing over the last year quite a lot, to adapt into it, to be able to create it. And then I imagine more businesses focusing on or looking precisely at stable coins in a different way as that they are doing today. And when I'm talking different is that even there is so much virtuous signaling on the stablecoin community, on stablecoin players, they're usually serving to the same kind of people over and over again. So those are the differences that we expect to change, the obstacles that we have been facing, and that we are ongoing gonna be facing as we're looking to bring more fairness into the financial world.
Great. Yeah, I mean it's always a breath of fresh air, to actually kind of read things from Reserve. You look at the general crypto space, and it's just yeah, like the same message to the same small market, and everybody's fighting over this very small group of people, and it's
Yeah.
And so they almost make compromises. Like just example is like security. And it's like, okay, well, just if we can get just this like extra yield, or whatever, it's kind of crazy. But I've always really appreciated that from Reserve. So thank you. So I guess like you probably have to go in just a minute, but I have just like one final question. So in regards to the existing RPay users, how will they be integrated into the new app? Will they be able to resume use as they were? How is that all going to work?
Yeah, there's gonna be a migration to the users. The migration is going to be seamless for them. So they're going to be require an update and accept the migration, and then everything is just going to happen very seamless for them. We are authorized to transact in Venezuela by the U.S. Department of Treasury through the license that we got. And as I mentioned, most of our customers come from Venezuela nowadays, but I have emphasized this on the team quite a lot. And like, I don't think that I have done such an effort publicly, but it's about time. We are embracing a complete new target segment, use case, a strategy approach that on the most competitive market of all, the US market. So we are obsessed into it. So even though we're gonna have those customers, we have a mental approach of we have 0 customers right now, because it's a complete new market. That is where we need to win. We need to win basically there in order to make this truly successful and be able to reach the vision and the mission that we want to achieve. So even though there's going to be a functionality that is available for current customers, the use cases are kind of quite different to what they were using before, and the optimizations are not going to be fun over there. So we are likely not going to see much of high usage for that customer segment to start with, and especially because the hardest part of any startup, of any project, is to make the flywheel rolling. And especially when you're talking on the most competitive market of all, and you guys need to understand this is not only the most competitive, but it's also the strategy that can reach us to a global, truly global scale. So our focus is in the US. We're actually going to market not to Latin America, but into the US, specifically at first into California to start with. And there, even though there is going to be usability for our current users, and even more usability for Latin American users, is not going to be a high any high usage or high volume or any of the components that we were having on the past, because it's a trade-off of the decision making that we needed to do to reach something that is way bigger. So that is an important expectation there. The migration is seamless. They're going to have their dollar balance. They're going to have a card as well. Many of our customers in Latin America, Venezuela may come a few months after fronting, but it's all related to where we need to get that flywheel rolling once again harder than ever. That is in the US.
Yeah, you only have so much attention, and you have to put it where you need to. I understand that.
And understanding that, just like it happened from Venezuela, by being successful in Venezuela, we're able to get users in different parts of Latam. From the US is very much the same, and that is kind of like the approach, but with a difference that people send way more money from the US and from Venezuela to people, and not only send but also receive from people from all around. So if we are successful in the US, our customers in the US are going to be sending within the same app, within the same ecosystem to the users internationally, and that is how we get users all around the continent the American continent first, and then to other continents of the world. So it's a step-by-step process.
Good. I think that's really good. I'm glad you guys are have a narrow focus.
Yeah, it's narrow, but with a huge vision in mind. It's not narrow on and let's just do a small thing. No, it's like, how do we get to a company that can change the world, that can make it equal for everyone to have financial services? How do we get to a global scale and understanding our size and understanding where we are right now, but having the right approach and the laser eye precisely to know how to aim in is what we have a thrived for to do it, and we're very, very excited on the place where we are right now.
Good. Do you have any other comments you would like to make? I guess just to the community or anything at all?
I mean, just it's gonna be a very exciting journey. It's very weird, and I think for many people that has been seen from the sidelines because of all the context switch that has been happening on the industry and on within RP and the evolutions overall of the reserve ecosystem. But I think that it's thankful for being critical, thankful for bringing your criticism out there, because honestly that is an extra fire precisely and motivation for me and for the team to be better, because we need to be better for the impact that we can change on the world, and for the people that as well believe in this project and that collaborate in many different forms, and supporting through social media and different channels to make this a reality. And at the end, I think we are all going to look back and look at the little contributions that all of you and that everyone in the community have made to make this a project, and to make this the kickstart of something that can change millions and millions of people's lives. So that is what we are here for, and I encourage the community to keep bringing that criticism out there.
Thank you. Do you actually mind if I ask one more question?
All right, I'll try to rush it, but
Yeah.
yes.
Okay. Will the app be available in English? Like, would you say in the next 9 months?
Uh, yes and no. Let me explain you why here. So from the 35% of the Latino population that is not bancarized, the primary reason that they mention that they're not bancarized is that they feel that their apps, their banks are not speaking on the same language. So that is one of the primary reasons. Bad Bunny is quite famous in Latam and also in the US. He's a reggaeton singer, for those that don't know the reference. And he's always speaking in Spanish. For those soccer players, soccer fans, Messi is another one, for example. He is even interviewed in English, but he's always answering in Spanish. And for Latin American people, actually, we get quite proud out of that. We get quite proud when people is talking firstly and primarily in our language at first, especially when they are identifying as one of us. We are us, and we're proud of our language as it is. So we are having a brand approach of Spanish first. And what I'm talking about Spanish first is that it's going to be available in Spanish at first, and is a initial configuration that is having, and our marketing communications are like almost most of them are gonna be in Spanish. in English, you're gonna see a little bit potentially in Twitter, but that is because it's targeted to a different segment there, more like the fintech and tech sectors. And we're gonna be speaking there not as large to our target customers, because Twitter is not very consumer friendly in the US for our target segment. So you're gonna see our app and most of our marketing material, even though we're targeting the US, in Spanish, but because of that brand approach that we're going to be doing. So having said that, yes, we are looking to have the app in English as well. But if it may not be at launch, it may be a few months later on. The reasoning behind that is very much that requires a little bit of extra work to do that. We are just optimizing it first and measuring data. So instead of doing that extra work and us at the same time knowing that we are not at a scaling point yet, that we need to kind of like just measure data and customers and that. So that's the reason that at launch it might not be an English at launch. That still might be. It's just a matter of different teams bandwidth related to it. We're having the capabilities of the app to enable those switches, but also wanted to explain why the Spanish first approach, given the special segment that we are starting at first into it. So yeah.
Okay, that's an amazing response. I really appreciate it. I will let you go. I do appreciate all of your time and everything, and thank you everybody else for coming today. We're super excited. So thank you, Gabo. Really appreciate it.
All right. Thank you so much for this as well. See you guys. Send you a big hug and exciting times ahead.
Thank you.
Bye bye.
Enjoy the weekend, guys. Thank you very much.